Capital expenditure versus revenue expenditure. Expenditure refers to any payment made. If the benefit of expenditure extends up to one accounting year, it is termed as revenue expenditure. Generally, they are incurred for the day-to-day business operations. An example can be payment of salaries and rent, etc. If the benefit of expenditure extends more than one accounting year, it is termed as capital expenditure. An example can be payment to acquire furniture for use in the business. Furniture acquired in the current accounting year will give benefits for many accounting years to come. The usual examples of capital expenditure can be payment to acquire fixed assets like heavy machinery and/or to make additions or extensions in the fixed assets. Let's understand some important points between capital expenditure and revenue expenditure. Capital expenditure is incurred to acquire fixed assets for operation of business, whereas revenue expenditure is incurred on day-to-day conduct of businesses. Revenue expenditure is generally recurring expenditure, and capital expenditure is non-recurring by nature. Capital expenditure benefits more than one accounting year, whereas revenue expenditure normally benefits one accounting year. Sometimes it becomes difficult to correctly decide whether the expenditures is revenue or capital. In normal usage, the advertising expenditure is termed as revenue expenditure. However, a heavy expenditure on advertising on launching a product is likely to give benefit for more than one accounting year, as people are likely to remember the advertisement for a slightly longer period. Such revenue expenditures, which are likely to give benefit for more than one accounting year, are termed as deferred revenue expenditure. Similarly, receipts can also be divided into capital receipts and revenue receipts. If the receipts create an obligation to return the money, they are capital receipts. For example, capital brought in by the owner or a loan taken from the bank. If a receipt does not incur an obligation to return the money, it is termed as revenue receipt. For example, sales made by the firm, interest on investment received by the firm, etc.
Thank you for watching. If you enjoyed this video, don't forget to give it a thumbs up. I'd love to hear your thoughts, so drop a comment below. And most importantly, hit that subscribe button and press the bell icon so you never miss an update.